Sphere Corp stock analysis. Sphere Corp closed the session of the 15th of April 2021 at $0.02, or rather $0.002. And we have a position in Sphere. Its market cap is currently at $10.6 million, 5.3 billion shares outstanding. We can see the stock has continued to retrace and retrace. We can see the relative strength index is approaching the oversold territory. The unbalanced volume indicator seems to be negative. 14 period slow stochastic oscillator definitely oversold. MACD is below the signal line, and for some reason I think it's also slightly above its signal line, but they are in the negative territory, and it says that Sphere appears to be improving within a longer term uptrend. Okay, although it's presently below its 200-day moving average, that average is rising due to prior gains in Sphere shares. Additionally, the MACD histogram, which used to measure the near term trend, is above zero. Did we see that above zero? Okay, it is unbelievably. Comparative relative strength analysis shows it's lagging the S&P 500. Momentum for Sphere is strongly bearish. The 14 period slow stochastic oscillator is below 20, the level which many analysts call oversold. This means that investors have been actively selling shares and driving the price lower. We showed you that, yes, and also includes short sellers as well. So the unbalanced volume indicator is bearish. We showed you that as well. The slope of the indicator is negative and suggests that there is a lack of buying interest, and it seems the Bollinger Bands are not as bullish as they would have been before now. Periods of low volatility tend to precede breakouts, although they do not provide information as to which direction the breakout will take. Trend and momentum indicators can be helpful to measure future trends. So we also have the historical volatility for 10 days. It's at 611.16%. So in as much as the stock has been retracing, we definitely know that maybe during its sessions, within intra sessions or within sessions, it may be volatile. Let's have a look and see. So this is one day chart. We have seen this sort of pattern in a lot of sub penny stocks. So that you can see, this is giving you a fair idea of what sort of volatility we may be looking at. So let's look at the 10-day, and we might graphically see have a glimpse of what it is like. So yeah, so this is what a 10-day chart looks like. It has continued to retrace and retrace and retrace. It is definitely bearish because this is the 20-day trend, 200-day trend line. It's definitely trading below it. So let's return to the 1 year trend line, which is also the daily model, or rather a 1 year chart based on the daily model. So yes, we are there now. So we can see what happened, where it is right now, trading below all of its trend lines. All of them are very much bearish. The 10-day, 20-day, 50-day, that is the short and intermediate trend lines, they are all very much bearish. The 200-day still very much bullish. You can see it still very much. That is only sliver of positivity there. The stock is trading at $0.02, and we have been able to find out that it's not even trading within or not even close to the 1 standard deviation of its 10-day trend line. It's not even trading within that range or even close to it. You can see it's trading at closed at $0.002. That one standard, the range, the 1 standard deviation range for the 10-day trend line is $0.003921 to $0.004802, and obviously the 50-day, the 20-day, no way, the 50-day, no way. So what does that signal? It's signaling that in as much as in as much as BlueSphere has continued to present a good buying opportunity over the last 10 days and more, even as much as it has continued to present a good buying opportunity, it's also, this is the truth, it's also has also continued to present more risks, because if it's not trading within one standard deviation of those trend lines, then it is trading at 2 or 3 or beyond, and the further it goes, it gets riskier. So in as much as it is presenting a buy signal, it has continued to do that. It's also presenting risks. It's also signaling risks. It keeps reminding you that the stock has continued to retrace and retrace and retrace. If you buy it, will it retrace further? If it retraces further, you will lose some money. That's what it's saying. So the question is, do you want to disregard those signals? Do you want to disregard the signal, the risk signal, and look at the positive signal, which is, yes, buy. This is what it's saying, because of the fact that it's traded at a discount to its short and intermediate trend lines based on the 1 minute model, and name it. It's definitely signaling a buy. So do you want to just look at that and ignore the risks? It's up to you to decide. So we have also seen that indeed the stock definitely has a lot of short interest involved in it. We have what is it called? Obviously, it's one of the stocks that's been shorted. It's definitely why, amongst other things, it has continued to retrace. So given all of those things, do you also want to involve the fact that there is short interest involved in the stock? Short interest means money is locked into the stock, and it has to be bought back at some point. So you have to decide whether you want to get negative about it. I'm not trying to corral you into buying it. I'm just asking questions. So you decide. Whether you want to jump in when others are leaving. One well-known investor, used to say, or said once, where there is a bloodbath, especially your own blood, is where you have to be. Right now, there is a bloodbath on BlueSphere. Would you want to be there? Would you want to get involved? Right now, it is so risky to buy it. If you buy it today, tomorrow, you may lose half of the value of what you put in. Do you want to disregard that, or do you want to look at the signals? Yes, indeed, right now the signals are very much completely negative, and not many people will get involved in BlueSphere. But also, some people might get involved. Are you going to be the one who's getting involved? I'm not saying you should do it, but these are the questions. And a lot of market participants ask themselves that. A lot of market participants are going to jump in where their own blood is flowing, where they're going to be slaughtered. And indeed, BlueSphere is also one of such stocks. If you get involved now, you'll be slaughtered, you'll be chopped into half right away by the next session. Is that what you want to do? You decide, whether you will continue to take up positions in a very risky stock. Even though it is, obviously, where there's a risk, there's also reward. You decide. Okay, so if you're new to this channel, subscribe, like, and share. If you're already a subscriber, thank you very much for watching this video.